Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 1, and this is Section A3. This is an application topic. Apply the ethical requirements and independence rules of the Government Accountability Office government auditing standards to situations that could present threats to compliance during an audit of or attestation engagement for a government entity or an entity receiving federal rewards. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and check out our free 1-hour webinar training where we go over the key ingredients to passing the CPA exam. Also, after you watch that, you're going to want to learn more, so make sure you check out becoming a pro member because pro members get access to the full versions of these YouTube videos. We're only going to be going over 5 questions in today's video, but remember, SuperfastCPA pro members get access to the full 10-question version on the members forum. So if you like this and you like our other materials, make sure you check out becoming a pro member. With all that, let's dive straight into the questions. All right, here we are at the first question. Which of the following is an ethical principle outlined in the Generally Accepted Government Auditing Standards, or GAGAS? Now, as we dive into these questions, this is a pretty simple and pretty straightforward topic, so we're not going to really spend too much time talking about each thing because all we have to do is dive into the explanation to learn what the rule is, and if you need to, maybe pause the video and take notes on what the rules are, and then we'll move on from there. So if you don't know which one of these is an ethical principle under GAGAS, then that's okay. We're going to use the answer to learn what the ethical principles are. So let's go ahead and take a look at the answer. All right, here we are at the answer. The answer is B, integrity. So let's walk through this. The Generally Accepted Government Auditing Standards, or GAGAS, issued by the Government Accountability Office, which is the GAO, outlines 6 ethical principles that guide auditors and professionals conducting audits or attestation engagements for government entities or entities receiving federal awards. So basically, these are the rules for people who are auditing government agencies and things like that. These principles are, and by the way, this is not a specific order. You don't have to have it in this order. This is just the order I have it in. 1, serving the public interest. 2, integrity. 3, objectivity. 4, proper use of government information, resources, and positions. 5, professional behavior. And 6, avoiding conflicts of interest. So if you want to pause the video, maybe write those down, or maybe kind of think of an acronym to remember those. That'd be great. These principles ensure an ethical foundation necessary for maintaining public trust and conducting high-quality audits. So as far as ethical principles go, kind of just the basic stuff that you need to know, these are the 6 ethical principles when it comes to generally accepted government auditing standards. So again, make sure you take a second to write those down, and when you're ready, come back, we'll go to the next question. All right, here we are at question 2, and something we didn't do in the first question because it was kind of a small question, but something that I think is a great habit to be in is to always read the last part of the question first. It isn't always helpful, especially when you're doing 10 questions or 5 questions in a row that are pretty much the same, where they're asking a very similar question. But remember, this is a good habit for test day. When you get to test day, you have no idea what you're going to be seeing on the exam. So you want to be able to read that last part of the sentence. And a lot of times that will give you context for what you are dealing with in that question. So for example, in this one, which one of the following best describes this situation under GAGAS? So immediately, if we were at test day, we would immediately know, if we had done our studying, that we were dealing with government auditing standards. So that's why we read that last part of the question first. And now let's go up to the top to kind of get the rest of the situation. An auditor is engaged to perform an audit of a government agency. During the engagement, the auditor learns that the firm managing the agency's investments is a significant client of their own accounting firm, generating 15% of the firm's annual revenue. Which of the following best describes this situation under GAGAS? Okay, let's go ahead and talk about these. Is it a self-interest threat? Is it a familiarity threat? Is it not a threat to independence, or is it a management participation threat? So if you kind of have an idea about these, pause the video and try to figure out the answer yourself. If not, that's okay. We're going to start learning about the different threats to independence in these situations. So let's go ahead and look at the answer if you haven't already paused the video. All right, here we are at the answer. The answer is A, this is a self-interest threat, as the auditor's financial reliance on the investment firm could impair independence. Okay, let's go ahead and go through the explanation to figure out what a self-interest threat is. Under GAGAS, a self-interest threat arises when an auditor has a financial or other interest that could conflict with their ability to remain impartial and independent during an audit. In this scenario, the significant revenue generated by the investment firm creates a self-interest threat because the auditor may be reluctant to issue a finding critical of the agency's investment activities, potentially harming their client relationship. Again, 15% of their revenue comes from this client, so they might be really nervous to be critical because they don't want to lose that money. The situation does not represent a familiarity threat, as there is no indication of close personal relationships. And by the way, we're going to talk about a few more threats in this, so don't worry, we'll dive more into the familiarity threat. It is also not a management participation threat, as the auditor is not involved in decision making. And lastly, C is incorrect, which C was saying that there's no threat to independence, because threats to independence can exist even when the threat arises from entities indirectly related to the audit. Okay, so again, this was a self-interest threat. Now let's go to the next question. All right, here we are at question 3. Which of the following best describes the potential threat to independence under GAGAS? Okay, let's go to the top. A CPA firm is engaged to perform an audit of a state-funded healthcare program. 6 months prior to the audit, the firm assisted the healthcare program in preparing its financial statements, including adjusting journal entries for revenue recognition. So again, what is the best potential threat based on what we have here? Is it a self-review threat, a self-interest threat, a familiarity threat, and an undue influence threat? A lot of the times in audit, you can kind of figure out the right answer just by thinking about what the words mean in the options. So take a second, think about what self-review would be about, what self-interest is about. We just learned about that. What a familiarity threat sounds like it would be. Things like that. You probably could figure this out even without me having taught you the answer. But with that, if you haven't already paused the video, let's go ahead and look at the answer to learn what kind of threat this is. All right, here we are at the answer. The answer is A. This was a self-review threat. Under GAGAS, a self-review threat occurs when the auditor is in a position to evaluate their own work or judgments made during non-audit services. In this scenario, the CPA firm's prior involvement in preparing the healthcare program's financial statements, including making adjustments, creates a self-review threat because the firm may be auditing work they previously performed. This could impair the auditor's objectivity and independence. That makes sense. They shouldn't be reviewing their own work that they did maybe like a year ago or something like that, because that might lead them to think they are correct no matter what. The other options are incorrect. This is not a self-interest threat because that would probably involve a financial or other personal interest conflicting with independence. This is not a familiarity threat because it doesn't really involve any close relationships. And again, we'll talk about that in another question. And this is not an undue influence threat because that arises when external pressures or threats from the client affect the auditor's independence, which is not present here. So again, this is a self-review threat because they have the potential of reviewing the financial statements they prepared for this healthcare program. So with that, let's go to the next question. All right, here we are at question 4. Which of the following best describes the potential threat to independence under GAGAS? An auditor is engaged to perform an audit of a nonprofit organization that receives federal grants. The executive director of the nonprofit has been a close personal friend of the auditor for over 20 years. They often vacation together and attend each other's family events. So again, what is the kind of threat we're talking about here? Again, based off the wording, I bet you could figure out what the correct answer is. So if you don't already know, maybe pause the video and think about it. And if not, let's go ahead and look at the answer to see what kind of threat this is. All right, here we are at the answer. And pretty easily, I bet you could have figured out this is a familiarity threat. So let's talk about this. Under GAGAS, a familiarity threat arises when an auditor has a close personal or professional relationship with an individual associated with the entity being audited, which could impair objectivity. In this scenario, the long-term close personal relationship between the auditor and the executive director creates a familiarity threat, as the auditor's judgment may be influenced by their relationship. So because they're close friends, they really don't want each other to get hurt, that could easily create a threat to independence because they might overlook things that they're not supposed to overlook. And then the other options are incorrect. Again, not a self-interest threat. I think that's pretty clear by now. Not an advocacy threat because that would involve promoting the client's interests, which is not indicated, which it could maybe turn into an advocacy threat because they're such close friends, but that's not what's being talked about right here. And then a self-review threat, again, that would be when an auditor is evaluating their own work, so that's not supposed to happen. With that, let's go to the next question. All right, here we are at question 5. Which of the following best describes the potential threat to independence under GAGAS? Now again, reading the last part of the question in this video might seem a little bit silly because it's pretty much the same question over and over again. We're just learning different things. But remember, this is a good habit to be in no matter what, because on test day, you want to know what you're dealing with each question. Anyway, let's go up to the top. A CPA firm is engaged to perform an audit of a county school district. During the engagement, the district's finance director resigns unexpectedly, leaving key responsibilities temporarily unfilled. To ensure continuity, the school district asks the CPA firm to step in and help manage certain financial reporting functions, including approving vendor invoices and preparing journal entries for year-end adjustments. The firm agrees to assist until the district hires a replacement. Which of the following best describes the potential threat to this independence? So again, now what is this? Again, based off of just thinking of the wording of these different options and the situation, a lot of times you can kind of think through things in audit. You just have to think about what words mean, and you have to carefully read what the question says. If you don't already know the answer, that's okay. We're going to look at the answer together to learn about another threat. All right, here we are at the answer. The answer is B, management participation threat. Under GAGAS, a management participation threat arises when auditors assume management responsibilities for the entity they are auditing. In this scenario, the CPA firm's agreement to approve vendor invoices and prepare your year-end journal entries clearly constitutes a management participation threat. By performing these functions, the firm is directly involved in decision-making and the preparation of financial data, which they could audit later or would audit later, and again, that impairs independence. So we're going to talk about that a bit more in a second, but again, why are the other options incorrect? This is obviously not a self-review threat, at least not yet, because they haven't had to audit their own work. But if that was the case, if they were auditing their own work, that would be a self-review threat. A familiarity threat involves close personal relationships. Again, that's not really what's happening here. And undue influence, there's not really somebody who's pressuring or intimidating them. I mean, the school district did ask them, but they didn't threaten them or force them to do it. They did it willingly. So that would not be an undue influence threat. So I just want to hit this point home one more time. Auditors are strictly prohibited from assuming management responsibilities because doing so undermines the auditor's ability to remain objective and impartial. Even offering temporary assistance in management decision-making compromises independence. So this is one of the ones that's kind of the strongest threat. Any management responsibilities that an auditor takes on is a threat to it impairs independence. There's not really any way to mitigate this other than just having no management responsibilities. There's not really an in-between ground for this kind of threat. Anyway, that was another threat that we learned about, and with that, we've gone over 5 questions. Before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You keep seeing questions teaching you about management threats, or maybe about self-review threats. Whatever the case is, these are the things that you see pop up in multiple questions, and these are the key points that you write down in your own words so that you know what is important for test day. And as you do this each day, again, you're building your own personal repository of what is important to know for the exam. With that, let's go ahead and look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just go through each of them. First off, let's talk about the ethical principles under GAGAS. GAGAS outlines 6 key ethical principles: serving the public interest, integrity, objectivity, proper use of government information, resources, and positions, professional behavior, and avoiding conflicts of interest. And these principles guide auditors in maintaining accountability and public trust. Remember, that one's kind of just remembering. You just need to remember those 6 ethical principles. Now let's talk about 4 threats. We did each one of these. Self-interest threat. A self-interest threat arises when an auditor has a financial or other personal stake in the outcome of the audit, potentially compromising objectivity and independence. Then there's the self-review threat. A self-review threat occurs when auditors are in a position to audit their own work or judgments from a previous engagement, creating a risk of biased evaluation. Now let's talk about a familiarity threat. A familiarity threat involves close personal or professional relationships with the entity being audited, which can make auditors overly sympathetic and less objective. And then finally, management participation threat. A management participation threat exists when auditors assume or appear to assume management responsibilities, placing them in a decision-making role that conflicts with impartial oversight. And with that, we've talked about what we need to talk about in this video. Those are the pillar topics. Now, before you go, make sure you check out our free 1-hour webinar training on SuperfastCPA.com. Again, we will teach you the key ingredients to passing the CPA exam, so you don't want to miss that. Also, just a reminder, we're only going over 5 questions in today's YouTube video, but SuperFast CPA Pro members are going to get access to the 10-question video that I'm about to finish recording after this. So if you like this and you like our other products, make sure you become a Pro member because they get access to a lot of great stuff, again, including the full 10-question versions of these videos. With all that, I hope you liked this video. I hope it was helpful. If you did like the video, make sure to like it and leave a comment, and I will see you in the next video.